Thank you, Anna. That was a fantastic conversation. I'd like to welcome to the stage Danny Alexander. Please join me in welcoming Danny. Should we do like Rory and stand? What do you think?
Sure, why not?
You're our second former British politician
then
on
I better
stage,
stand.
so I feel like the trend has been set.
I don't want to be upstaged by Rory. So,
no, that of course not. You were chief secretary at the Treasury in the UK government.
Well, I was in the government in the time when we were actually committing to 0.7% of GDP and making it happen. So
those were nice days.
Those were different days.
Those were different days. Well, you have since joined and spent the last 7 years or so, I think, at the Asian Infrastructure Investment Bank. And we just heard a kind of call to action about the Bretton Woods institutions sort of laying it up for you in a way, saying that they're out of date and need to be reformed. Maybe take this moment to just tell everyone, what is the AIIB and what is maybe the biggest misconception about the AIIB that you hear?
Okay, so since the voters gave me a chance to seek an alternative career in 2015, I moved to Beijing to help set up the AIIB. The Asian Infrastructure Investment Bank is a multilateral development bank. Started out with 57 members, now 106 members, including, I'm delighted to say, Kenya has joined our bank. We invest in infrastructure projects to support the sustainable development of Asia, but also countries beyond Asia, with a particular focus on climate and the green transition. We're headquartered in Beijing, but we're not a Chinese bank. I guess that's the biggest misconception,
one, right?
the one that you were trying to get me to talk about. So let me talk about it.
Please.
So AIIB has countries from Europe. We have countries from Asia, from Africa, from Latin America. Canada is a member of our bank, and it operates just the same as, in governance terms at least, to other multilateral institutions. You know, we have a board of governors, a board of directors representing all of the countries. We have a management which is politically independent, makes decisions on the basis of economic grounds. And so in terms of multilateralism, we are as strong a part of the international rules-based system as any other institution. We're owned by all of our shareholders. We respond to all of our shareholders. We try and be client-focused and client-driven, not trying to tell our clients what to do, but to listen and then to finance projects that they need. And we're trying to be, we talk about our mantra, lean, clean, and green.
Yep.
And we're trying to be a lean and efficient multilateral institution.
That's not an oxymoron.
Not yet.
Well, I ask you that in part because you were started in the mid-2010s, not in the 1940s. So you had a chance to do something a bit different. What are the things that, I asked about the misconception, what are the biggest differences between AIIB and the rest of the multilateral development banks?
So I guess a few things. I mean, so starting with the governance, the structure and the principles, the rules are very similar. We have a non-resident board. We don't have a resident board. That means that our board has decided to have a very clear division of labor between what they do and what the management does. So you have less of the micromanagement that you see in some of the other institutions, which for them is a cost, right?
I know a new resident of Washington, D.C. who wishes he also had a non-resident board.
Right, maybe. I couldn't comment on that, obviously. But for us, so our board is clear. It's responsible for the setting the strategic direction, for the policies, for holding the management accountable. They've delegated authority to approve many of the projects to the president, which enables that process to be done more efficiently, but equally effectively. We have a philosophy of working in partnership. So we don't feel that we have to have every single function contained within AIIB when we have partners who do it well. So we were talking about debt earlier. We work very closely with the IMF on the debt sustainability analysis. We are the largest co-financing partner of the World Bank.
That may be something that most people don't really know. When I talk to people at AIIB, maybe just underline that statement and explain what it means.
Well, it's a fact. So we think that for many large infrastructure projects, co-financing among multilateral institutions is critical. And obviously, when we were getting started, it was really valuable also to us as we were building up our institution. So we are very happy to work with other multilaterals. We're close to the World Bank, to the Asian Development Bank, and to others. And what we decided is, from the client point of view, if we think that another institution has basically the same high standards as we would apply to our project, as the World Bank does, for example, then we don't require the client to do 2 lots of environmental and social audits, 2 lots of assessments, 2 lots of documentation. We can accept what they've prepared for the World Bank. Maybe there's some gaps and we want to do a little bit of extra work, but that is more streamlined and more efficient. I think it's something that the whole multilateral system could learn from.
So President Jin Quinn of the Asian Infrastructure Investment Bank actually wrote an op-ed in Devex this summer.
Yeah.
And in that op-ed, he argued for much more collaboration among the MDBs. Can you just expand on what is the vision that he and you at the AIIB are promoting?
So, I mean, in this current discussion about MDB reform, there are 2 kind of big issues. One is about finance, which I'm sure we will talk about. How do we scale up the finance provided by MDBs to particularly push forward the climate transition? But I think the other is, how do we bring the MDBs closer together to work more effectively as a system? Now, partly, of course, there's a lot of cooperation going on, which is perhaps not as well known as it should be. So, for example, in the last few months, all of the multilateral development banks have introduced Paris alignment, which means every single project that AIIB does now or the World Bank does now has to be in compliance with the Paris Agreement on mitigation and adaptation. But we need to go deeper. You know, we need to think about how can you have kind of hardwired systemic cooperation. It's not on a case-by-case basis, but it is something that is built in to the system. We need the heads of the institutions to be working together on these strategic issues. We need, so to take the example I was giving earlier about the kind of policy considerations, if we can recognize those as a system and work together, then we can make life easier for the clients. We can get more projects done, larger projects done more efficiently. I think those are the kind of things that we should be working on together.
This is a big part of your remit, of your role. How is that going and how realistic is it? I mean, MDBs historically haven't collaborated that much, and now at a moment of more geopolitical tension than ever, can you really get the MDBs to do something that's sort of counter trend here?
I think there's a lot of willingness, actually. I'm quite optimistic about this agenda. I mean, I think that, you know, the work that's been done in the G20 here this week, the focus on how can we really strengthen the ability of the MDB system to respond to these unique global challenges. I think that is creating a unique moment when we can really drive change, both in terms of how we finance, of the range of things we can do, of the scale, but also about how we collaborate. And so I think I'm quite optimistic that this is a moment where we can really make significant changes in this area.
We heard it from Rory Stewart earlier, right? That bilateral aid budgets have been going down in many places. And so there's more and more attention on the multilateral development banks, including the AIIB, to say we have to make the funds that are available in these institutions go further.
Right.
We have to crowd in the private sector. When you think of those calls to action, we have a new president of the World Bank and Ajay Banga saying the same things. And we're now at this midway point of the SDGs and everyone's looking for the $4 trillion under the mattress. How does this actually work?
So it works differently in different institutions, frankly, because they all start from different places. But I think fundamentally the issue about crowding in the private sector is the critical one, because to get to the multiple $1 trillion of investment that is needed in the climate transition, you know, even if you stretch the MDB's balance sheets to the maximum, you know, that talking about tripling climate finance, what's that, $300 billion. So then we have to be more willing to use our capital in flexible ways to support the private sector, to take some risks that enables private sector investors to feel more comfortable going into emerging markets. One of the things AIIB has also been working on is about capital markets. We've been working with developing a new market for infrastructure asset-backed securities in Asia, which we think is a route through which new kinds of capital can come into infrastructure without having to understand individual project risk, but instead get exposure like a bond. So the Bayfront project in Singapore is an example of that. So I think there's some innovation, and I think we have to be much more willing to embrace innovation. You know, we don't have time to wait and make sure everything's perfect with everything we do. We've got to try a few things, see what works, and then scale them up.
Right, and I think historically shareholders, governments have not been so ready to adopt innovation because they tend to be risk averse. But in this moment, if there's ever a moment with the crises mounting and the needs so great, this is the time to do it.
Well, I was a minister in the British Treasury, so I completely get the instinct that says we've put our capital in, we want to protect it, we want to make sure that you're not taking excessive risk. Completely get that. But actually the message now in this MDB reform discussion is different. It's how can we get the MDBs to take more risk? consistent with the AAA rating, which is an important part of the business model. So I think again there is more political willingness to embrace those kind of changes than perhaps there ever has been.
So as a former minister, as somebody who campaigned for the 0.7 in the UK,
delivered it. Thank you very much.
Delivered it. That's right. You were in the government when it happened. You know, we are now at the midpoint of the SDGs. And just as a final thought from you before we close, only 15% on the way there, but halfway to the target date. What realistically is going to happen here? What do we need to do to get there by 2030?
We've got to do two things. We've got to collaborate much more effectively together, which is what we were talking about earlier, especially not just the MDBs, but then going into the much broader community. You know, we take part in the Financing Common Summit, which is bringing together all of the development banks and institutions. We've got to collaborate much more effectively. And I think we've got to put the clients first. We've got to listen to what it is our clients are asking for and find the right way to deliver it. I think those two things can help us get a long way towards achieving what needs to be done.
Yeah, well, thank you, Danny Alexander. Please join me in thanking Danny Alexander, the Asian Infrastructure Investment Bank. Thank you.